If you're tracking the seismic shifts happening in the global economy, we've hit a real pivot point.
Absolutely. Artificial intelligence is just fundamentally changing how value is created.
It really is. And
Yeah.
so today, we're taking a deep and I think necessary look at one of the most proactive policy ideas emerging from this revolution. It's called universal basic capital.
Or UBC. It's an idea that really cuts through all the noise about AI and jobs,
Yeah.
and it gets straight to the heart of wealth, of ownership. We've all spent years debating universal basic income, UBI.
Right, which is about sharing income after the value is already made.
Exactly. It's redistribution. But UBC, it just flips that script entirely.
It does. Our source material for this dive, which is based on research titled Gedeeld Eigendom in the AI Economy, suggests we're at risk of triggering the biggest wealth transfer in history.
Moving from labor to capital.
And unless we act now. So our mission today is to unpack this idea. What is universal basic capital? How do we know it can even work? And I think this is the core of it. What's the enormous price for societies that choose to just ignore it?
The stakes couldn't be higher for you, the learner. This isn't just theory. This is about designing the economic infrastructure for the next 100 years.
Okay, let's unpack this central concept then right away. When we talk about universal basic capital, UBC, we need to get past the name and really understand the mechanism. So what is it? And why is it so different from traditional welfare?
Well, the core definition is that every single citizen becomes a direct owner of a portion of the productive AI-driven economy.
A direct owner.
A direct owner. They don't get this through labor or even from their own personal investments. They get it through things like national investment vehicles or public wealth funds.
Okay.
These funds hold tangible shares equity in the platforms, the companies, the whole infrastructure that's building out the AI future.
So it's not a cash handout. It's not a guaranteed salary. It's more like a share certificate.
Precisely. And this leads to the most important distinction here, which is really the foundational insight of this source material.
And what's that?
UBC is built on the concept of predistribution, not redistribution.
That's a powerful phrase. Let's stay on that for a second. Most policy talks, they always focus on redistribution, right?
Yeah.
You tax wealth and income, then you allocate the funds.
Right.
How does predistribution change that conversation?
Well, think of it this way. Redistribution is like asking a successful entrepreneur to share a slice of their pie after it's already been baked.
And that's always a political fight.
Always. It's fraught. Predistribution, though, says that before the pie is even baked, society agrees that some key ingredients, like the public infrastructure, or the data, or the foundational AI models.
Stuff that's built on public research.
Exactly. That those things are collectively owned. It's kind of like everyone owns a piece of the oven, so they're entitled to a fraction of whatever gets baked, right from day one.
That completely shifts the conversation from welfare, which has a certain stigma, to property rights in this new economy.
It does.
You're positioning citizens not as, recipients of charity, but as rightful shareholders.
Rightful shareholders of value that's been collectively generated. It creates this foundational pool of capital that grows as the market grows, directly connecting the AI sector's prosperity to the average citizen's prosperity. It's proactive, not reactive.
Okay, I have to inject a little skepticism here, though, because historically, public wealth funds can be, they can be deeply political.
That's a fair point.
They get mismanaged or used for short-term government spending. What stops UBC from just becoming another slush fund for whatever party is in power?
That's a crucial question, and the sources address it by emphasizing these very strict legal structures that ring-fence the assets.
So they're walled off.
Completely.
Yeah.
The success stories we're about to look at, they work because they are mandatory, automatic, and legally protected from legislative raids. They're designed to compound over decades, not to be a government ATM.
That makes perfect sense.
Yeah.
And what's so compelling is that this isn't just some utopian dream.
None at all.
We have real-world prototypes showing that shared capital ownership can compound into, staggering national prosperity. Let's dig into that evidence.
The scale of the existing examples is probably the clearest proof. Take Australia's superannuation program.
Okay.
Now, this is a mandatory retirement savings program, but the sheer size of the aggregated capital just shows you the power of pooling everyone's money together.
What kind of scale are we talking about here?
The system has grown to hold a phenomenal 4.2 trillion Australian dollars.
Wow.
And to put that in context for you, that single nationally pooled fund is now larger than Australia's entire annual gross domestic product.
Larger than their GDP. So the retirement wealth of Australians has more economic weight than the entire country's annual output.
That's right.
$4.2 trillion. That is a mind-boggling demonstration of compounding capital. It proves this model works. What other models are out there?
Well, we're seeing proposals pop up all over. In the United States, there's the Money Accounts for Growth and Advancement, the MAGA Accounts proposal.
Okay.
And the idea there is beautifully simple. Every child born in the U.S. gets an initial seed investment, maybe $1,000, into an S&P 500 index fund.
So every citizen is born with a piece of the American economy that can just grow for decades.
Exactly. You're democratizing access to capital markets right at the starting line. It just normalizes the idea that your future shouldn't just rely on your labor, but on the collective success of the whole economy.
And we see a different approach in Germany, right, with their early start pension idea.
Yes. The U.S. one is a lump sum, but the German proposal is more about consistency. So 10 euros a month invested in capital markets for every child.
A small, regular drip feed.
It encourages saving habits, participation, and what these three diverse examples, Australia's huge fund, the U.S. seed money, Germany's small investments, what they all show is that there are many paths to this.
But the fundamental truth is the same.
Shared capital ownership, when it compounds, it fundamentally shifts the dynamics away from just relying on an hourly wage.
It shows that capital can work for everyone, not just people with a huge inheritance. It's about participation.
It creates a baseline of capital income, which is just crucial in an economy powered by automated, capital-intensive tech.
Which brings us to the critical core of this deep dive, the cost of inaction. If these mechanisms are so promising, what happens if societies just ignore this?
Well, without UBC, the sources are pretty blunt.
Yeah.
The AI revolution will trigger the biggest wealth transfer in history. It'll rapidly accelerate the inequality we already have.
So we need to ground ourselves in the facts of where we are now before AI really kicks in.
Exactly.
So give us the numbers. What does capital ownership look like today?
The disparity is intense. In the U.S., the top 10% of Americans already own 93% of all equities.
93%. That's stocks, mutual funds, everything.
Everything. Now look at Europe. The top half of the population owns nearly 60% of all wealth.
Okay, and the bottom half?
The entire bottom half owns just 5%.
5%. Let's just pause on that. Half the population of Europe owns barely enough to even matter in the overall wealth structure. Does that mean we've already lost the battle?
It means the battle is very, very uphill. But here's why AI turns this problem into a full-blown crisis.
Okay.
AI isn't just another invention. It's not the steam engine. It's a general-purpose technology that is fundamentally capital-intensive.
Explain that, the capital intensity part.
It takes huge upfront investment, in GPUs, data centers, specialized talent, just to build and train the models.
Right.
But once that AI system is built, it can generate massive value at almost zero marginal cost. It replaces human labor, cognitive tasks, instantaneously.
And if only the existing wealthy elite, the ones who own that 93% of equity, if only they own the algorithms and the platforms.
Then the wealth gap doesn't just widen. It hardens into the very structure of the economy. It becomes permanent.
That makes universal basic capital seem less like a social aspiration and more like an economic necessity.
That's the critical takeaway.
Because if AI becomes the core engine of value, then capital access, not labor, not even education, becomes the defining factor for opportunity.
When the engine of prosperity shifts from human effort to machine intelligence, owning that machine intelligence becomes the paramount issue. Inaction means we let that inequality just solidify. We miss the chance to build prosperity into the system before the gap becomes unbridgeable.
And this sense of urgency, it's starting to translate into some pretty high-level policy discussions, especially in Europe.
Precisely. You see major European figures recognizing the region needs to take some radical steps. Mario Draghi, for example, has called for gargantuan EU investment.
We're talking huge numbers.
We're talking about 800 billion euros a year.
A year.
Per year to boost competitiveness and catch up on AI and green tech.
800 billion a year is nation-building stuff. But if that money just gets poured into existing companies, doesn't that just accelerate the same inequality problem you just described?
And that's where the crucial civic twist comes in from the Berggruen proposal. The argument is that this massive public investment, this 800 billion a year, it has to be tied to a European sovereignty fund, one that is explicitly designed to give citizens equity, not just subsidies to corporations.
So the state invests to build Europe's AI future, but instead of the public taking all the risk and private shareholders getting all the reward,
The citizens themselves get a direct ownership stake.
it completely flips the incentive structure.
It turns public investment into public wealth creation. The goal is straightforward. Europeans have to benefit from this growth as shareholders.
Right, not just as bystanders or recipients of a safety net paid for later by corporate taxes.
If EU citizens want a prosperous future, they need to own a piece of the capital that will define that future.
You know, it sounds like Europe's legacy of social democracy might actually give it a strategic edge here.
The potential is absolutely there, but the source material introduces a really critical caveat.
There's always a catch.
There's always a catch. UBC is a distribution mechanism. It's not a creation mechanism. Meaning, to have wealth to distribute in the first place, countries like Germany and France and the EU as a whole, they have to become much more innovative, much more competitive,
They need to build stronger tech ecosystems.
and invest massively in their own AI infrastructure. Without a powerful competitive engine that's creating value, even the best wealth-sharing model isn't going to be enough.
You can't distribute zero. That is a powerful final constraint. The policy challenge isn't just about fairness.
It's about competitive survival. The idea of UBC forces nations to think about creating prosperity and ensuring equitable ownership at the same time.
It's the difference between a social contract that just manages existing wealth through taxes
Versus one that proactively structures the creation of new wealth by distributing ownership from the very start.
Which brings us to our final takeaways for you, the learner, trying to grasp the full stakes here.
Right. First, remember the fundamental shift. UBC is predistribution. It's building ownership into the system. And it's a model already proven by prototypes like Australia's fund, which holds trillions in citizen wealth.
And second,
The urgency is driven by hard data. Inaction means we accelerate the biggest wealth transfer in history, and we solidify capital access as the ultimate determinant of opportunity in the post-AI world.
so if the AI economy really defines value through capital, and 93% of that capital is already concentrated, we're running out of time to build mechanisms that let the average citizen participate as a shareholder.
Not just as a consumer or a displaced worker.
Which leaves us with a pretty powerful final question for you to consider.
Is building prosperity and ownership into the system now, before the current inequality hardens into something permanent and structural? Is that the only way forward for a humane and balanced AI economy?
Something profound to think about as this all continues to accelerate. Thank you for joining us on this deep dive into universal basic capital.
Thank you.
If you found this discussion valuable, please take a moment to like, share, and subscribe to The Deep Dive. That way you'll never miss another analysis of these complex, crucial subjects. We'll see you next time.